Africa. Malupa, you spoke, as I spoke of penalizing Africa, basically, you spoke of the need for lowering risk premiums. Okay, you are the genius with this. So how do you lower the risk premiums for Africa?
First maybe give a perspective of what does it mean. So the fact that African countries tend to get rating lower than what is justified by their fundamentals. A one-notch rating that is lower translates into $2 billion higher in cost of borrowing.
Okay, so I'm going to have nightmares again with that 2 billion.
Yes, a 1% means, it translates to 1% interest higher, and that's what it means on an annual basis for African debt. If we then talk about not only that, but they also suffer from mispricing, which means if you go to the market, for the same rating level, you get to pay higher cost for your debt than other countries with the same rating. That's what we call mispricing. And that tend to be, I've done work before on the issue of investors tending to treat African sovereign bonds as one asset class. So basically, you have the coup in Niger, and behold, there is a 40 basis points higher on Kenya. I mean, these are not even the same region of Africa. Okay, no borders. So this is the type of thing. While if you look at what happened when you had the Greek crisis, actually the spreads on German bonds went down. So that tells you that there is something about the mispricing on African bonds. And here I want to emphasize a very important point that had been mentioned before: the need to shift the narrative on Africa from the lens of risk to the lens of opportunity. And I think all of us have a role to play, including the FT. So here we tend to see, focus on, for example, coups. While when you get 6 or 7 countries, African countries out of the
they do happen, the coups.
They do. But there are also good news that don't get really kind of the level of exposure and coverage. When you have, some of the largest, solar projects in the continent ever, whether Benban or later like the investments in Morocco, this doesn't get much coverage. Or when you have things like off-grid solar system and innovation, you don't get the coverage. So we need to focus more on these positive stories because it affects perception and it has a cost on the ordinary citizens. So that's, a call for all of us to kind of bring up all the good things that are also happening in the continent. How do we deal with it? I think there are a number of issues. There is at a national level, we need to make sure that data is available so there's less room for discretion, regular and credible, and that governments need to work on with the support of, international organizations and DBs.
Well, tell the coups in Niger and Mali and Burkina about it. They've been made available.
We'll take that conversation later. Meanwhile, we need to also enhance communication in terms of communicating on reforms, communicating on progress for nationally determined contributions, communicating with investors and with credit ratings. But then on the other side, we need to actually have, have a look at the methodologies, the consistency, how regular and off-cycle, changes in ratings happen. And then we need to have checks and balances. If you're not happy with a rating agency, if I'm not happy with my bank here, I can, go through internal recourse, and then I can go to Financial Conduct Authority. Yet a country cannot have that. They only have the internal recourse mechanism of the big rating agencies. So there is scope for improvement here to really ensure that there is oversight globally or at a continental level so that we get that type of checks and balances. So these are, some of the key things that we need to do, and we need to sell more the opportunities that, African countries have by, publishing, for example, the list of green bankable projects that are available, having data on them available.
The sexy projects.
Yes, and not only that, but also make sure, because I had the experience, for example, of working on, pipeline of bankable projects, but when you go to investors, they say, but, these are really nice and interesting, but it's less than $20 million US, the ticket size is not enough. Well, we need to create aggregators, because if you have these type of projects, and, for some of the countries, they are small-sized countries, so you need to make sure that you have the tools then to act on them and to, attract flows. So one of the things that we need to work on, having these aggregators, whether at a national level or regional level.
That's a very good point, actually. And